Everybody at 109 was talking about 250. And now when Bitcoin's at 74, they're all looking for 68 or whatever. 12 months out, all of crypto is going to be higher, much higher, right? Because it's this simple. It's the future, right? You got nowhere else to bet on technology and the future of money.
Many are coining today Black Monday, but our next guest says that it doesn't quite compare to the Black Monday that occurred in 1987. Despite the market's free-falling, YouTuber Bill Noble, who has worked as a futures trader both on trading desks and on the floor of the CBOE, says that Bitcoin will rise from the ashes and prevail as a store of value. Bill Noble, welcome to Markets Daily.
Hi, thanks for having me.
All right. Happy Black Monday, I guess. And the reason I'm starting with that is because I follow you on X and I saw what you posted this morning. You said that it can't be Black Monday if it trends on X the night before. Talk to me about what you mean there.
In 87, Black Monday was where, 3 and 5% moves became a 25% move in one day. No circuit breakers, no internet. It was retail brokers had to stand in line with a stack of tickets to a wire room, right? And they just wire one order after the other. So that's how the panic built back then. And that was so bad. Like I called my dad, who was a stockbroker. I was like, Dad, do I have to come home from college? There's another story about a guy who left the New York Stock Exchange, bought a gold bar, and just sat in his bed in the fetal position with his gold bar. Like 87 was like psychologically scarring, shocking. Whereas if it trends the night before on X, there might be a down move, but take it easy on Black Monday, guys. That was really bad.
Well, talk to me a little bit about that. I think that there are many people who watch the show who didn't really live through 87 the way that you did. What are the similarities and differences we're seeing here? We're seeing a lot of analysts compare what's happening in the markets right now, what's happening in the economy right now to 87 and even 2008. What are the similarities and differences?
Okay, this is a great question. In 87, you do have parallels. One, there was concern about our trade balance with Japan. The old school name for the number that was released was merchandise trade. Then you had a young Fed chairman, Alan Greenspan, who was trying to talk all tough on inflation, right? Like his predecessor, Paul Volcker, right? Interest rates were way too high. I think the 30-year bond printed 10%, right? Bonds were going down, yields were rising. Interest rates were way too high. And that's what triggered it. So, the Trueflation Index shows inflation at 1%. Powell babbling at the last meeting about concern over inflation, right? So that's what smells like 87, right? And you can have extreme downside volatility, particularly if retail panics and hedge funds get liquidated. It's not uncommon. Back then, my father blamed it on, program trading, the algorithms of the 80s. And you could have algorithm-based commodity trading advisors selling today, but that may bring it to an end. I mean, equities normally don't bottom on a Monday, but come Tuesday and Wednesday, people might look around and go, okay, why are we doing this, particularly in Bitcoin?
Tell me a little bit more about what you mean there. If you look at what's happening now, when do you expect the bottom to come? How do you expect to see Bitcoin react? And is that different than the rest of the crypto markets?
Okay, yes, right? Because equities people have undoubtedly discovered that their magnificent 7 positions are no longer magnificent going forward, right? Those stocks are not going back to their highs anytime soon. And if you want to trade AI, you probably got to trade it in crypto or somewhere else. All right. So when everybody goes and adds a 0 to their Bitcoin allocation, so if they're 3% Bitcoin, they could go to 30% Bitcoin, or they have 2% Bitcoin, they could go to 20% Bitcoin. If you think about it, what's wrong with 50% stocks, 20% Bitcoin, 20% other, for example, right? What's wrong with that? Nothing. Matter of fact, it makes a lot of sense, and it's going to make a lot of sense, particularly if you have a, maybe it's a Black Monday, maybe it isn't, but you've kind of already psychologically scarred people. So equities will go down and then find a range. Bitcoin could go down and come screaming off the bottom, right? Like equities might go down in range. Bitcoin might go down because it's very simple. Whatever's going on with the tariffs, and we can go into it if you want, tariffs, $9 trillion, it has to be refinanced. Look, we need a different form of money, right? We can talk about the motivations, but at the end of the day, this is what Satoshi meant when he made Bitcoin. And everybody, meaning equity and crypto people, are going to figure this out if they haven't already.
It's interesting you say that. We come back to the original thesis of Bitcoin. If you go back and read that Bitcoin white paper for our audience who maybe hasn't read it yet, you're right. It was created out of the 2008 global financial crisis, and it feels very similar to what we're experiencing now. At the beginning of the interview, you told that story about the guy who went and bought the gold bar after 87. I mean, help me draw a parallel here. Do you see Bitcoin as that gold bar now? And do you think that we're going to see new entrants into the Bitcoin space as people start to kind of become aware as to what's happening from a global economic perspective and from a crypto perspective?
Yeah, I mean, this is what BlackRock built the Bitcoin ETF for. This is why they built it. This is why Fidelity has it, right? Because they don't want everybody like selling equities and leaving their company. They want to be able to roll them into something. And then this idea that you're just going to need a different form of money. It's like dollar, tariff crisis of confidence, euro, yen, right? Like, what's your choice? And then, if you go to the Bitcoin standard book, it's gradually, then suddenly, right? And that could happen in Bitcoin. And I don't think people are focused on that, right? They're kind of focused of, oh, I got levered, or hedge funds, risk management in hedge funds. It's like, imagine 4 dogs in kennels close to each other. If the stock dog starts barking, the bond dog will start barking, and then eventually the crypto dog will start barking. But when everyone calms down, people might look at crypto and go, oh, and you are right. I don't know if people are going to put Bitcoin on a hard wallet and lie in bed in the fetal position, but Bitcoin may help people sleep better at night. And again, you're going to be shocked at how fast, not just people, but countries figure this out. Because whatever this tariff thing is, you can call it a lot of things, and I have what I call it, but it could change the way people think about currencies.
Well, just for our audience who's maybe watching what's happening in the markets now, seeing Bitcoin on that free fall along with other crypto assets and non-crypto assets, how do you make sense of the volatility against what you've just said?
Well, there's the idea that, hedge funds are getting liquidated. So, barking dog analogy aside, it's just like we may be in this just sell everything mode. Like, if you sell what's not working and take a loss, you go, well, what is working? Oh, Bitcoin. Okay, sell that too. Right. It's mindless selling. Right. And then, that's what creates the volatility, because Legacy TradFi has priced in a recession. I mean, it was more or less priced in 3 or 4 days ago. And by the time this is said and done, they'll have a recession 100% priced in. Now, of course, after they get it 100% priced in, it may not happen. You may get lower rates, lower inflation, because I think at the end of the day, the administration wants lower rates, so there'll be a bid for all these bonds that they have to issue, right? They have to issue $9 trillion in bonds this year, I believe, right? And even if it's less than that, it's still trillions. So, you have to ask yourself, it's like, wow, they did this tariff thing. Isn't that a tax on trade? Like, first thing I said when they did it was, wow, they're broke. They just raised taxes indiscriminately. Why? Well, because they got to refinance the debt. So if you're a Bitcoin investor or you're a crypto investor, stable coins, Bitcoin, XRP, whatever, you go, wow, Uncle Sugar's run out of sugar. I got to get outside the system. So that's how I think you make sense of the volatility and come up with a plan for what's next.
Let's talk about those tariffs. We've had a lot of analysts who've come on this show and have said, the tariffs really are just a negotiating tactic. We've seen that across multiple different news outlets, multiple different headlines. The tariffs seem to have, they seem to be taking a few steps forward and a few steps back. And then we've had this kind of catalyst recently. Talk to me about what you think the motivations are behind them and how they're going to continue to impact what's happening from a global economic perspective.
Okay. Tariffs as a negotiating tactic, not only is it being espoused by 9 out of 10 people, it's also propaganda. It's wrong, in my opinion. In other words, right after they did it, you had the Treasury Secretary on with Tucker Carlson, right?
Mm-hmm.
Tucker's dad was in the intelligence community, and you could make an argument Tucker is too. Maybe. Why is the Treasury Secretary talking about tariffs? That's like Secretary of State, maybe some Fed economist, president. The Secretary of the Treasury talks about like refunding, interest rates, something going on with the dollar, not tariffs, right? So he's out front because he's in charge of the refunding. He needs the dollar lower, right? It's the only way out of a debt crisis is to devalue the currency. I'll spare you the economics textbook. You don't have to read it now, right? So he's out front because they need rates down. They need enough fear where there's demand for the bonds that they issue, hopefully without wrecking everything. That's a very delicate balance. But this tariffs as a negotiating tactic, oh, please. That's stuff that they say on Air Force One. This is about refunding a quasi-insolvent government. They were spending $1 trillion every 5 months, like last year. Naughty. Bitcoin,
I recently did an interview with Senator Cynthia Lummis, and I'm sure you know that the Bitcoin Act is one of the solutions that's being presented, that's being led by her to start to tackle this 30-something trillion debt that the U.S. government has. What do you think of her plan for a strategic Bitcoin reserve held by the government of the USA?
Well, I think it makes all the sense in the world, but there is some comedy about this, that if the Orange Man was going to drop this kind of bomb, they should have bought Bitcoin before that. Now they may wind up paying 120. I think Cynthia Lummis got her ideas from maybe Michael Saylor and RFK Jr., who wanted to use Bitcoin as partial backing for the currency and certain types of treasuries. You can go back to Consensus, maybe a year ago and check that speech out. So yeah, strategic Bitcoin reserve makes a lot of sense, but I mean, the timing was off. Do it before you drop the bomb. Now, if you do it now, it looks like you're panicking. Like, oh, I better get Bitcoin on the balance sheet. It's like everyone's looking for an emergency Fed rate cut. We could talk about that too. But Cynthia's completely got the right idea, because if we don't do it, someone else is going to do it quickly. Like, how long do you think the stock market thing can go on before people go, gee, we better do something? So, yeah. Michael Saylor and Cynthia Lummis. The only problem with Michael Saylor and Cynthia Lummis is that you only got 2 people out there talking about it. Who's going to help these people? Like, I would volunteer, but I'm not famous yet.
Yeah, maybe there's a side gig out there for you, Bill.
Yeah, give me the microphone.
Well, let's talk about Michael Saylor and MicroStrategy. How are you looking at MicroStrategy amid everything else that's happening this morning?
Okay, well, hedge funds are all short it. So if everyone expects the same thing, something else happens. They were all long NVIDIA, short MicroStrategy. Long NVIDIA didn't work out. Michael Saylor, this is a guy I used to work with, believe it or not. He says, MicroStrategy has a moat around a moat, right? There's no way to put the software that runs Bitcoin into a chatbot and replicate it. You could put the code for TikTok into a chatbot, it could replicate it, but you're not replicating Bitcoin as software. one. And two, he's got so much Bitcoin. I don't think anybody could go in the open market and do that without buying a Bitcoin miner. So his stock is very unique. Yes, his stock is expensive. If you got any legacy spreadsheet guys out there, relative to the Bitcoin he holds, who cares, right? If the world's coming unglued, this guy has a moat where no tech stock, no software company has a moat anymore because of AI. Again, this, somebody, Jordy Visser was the guy who came up with this, and he's absolutely right. And everyone's short the stock. It's like, really? And again, Mike is on TV every day, right? He does his tour every day, says the same thing. He's right. And everybody keeps waiting for him to be wrong. He's reckless. He's this, he's that. Every time I see the Michael Saylor's reckless headline, that's the bottom.
That's interesting. Well, I mean, before we wrap up, Bill, talk to me. When is the bottom coming? Has it come already? Where do we go from here? If you look at the next 12 months, what do you see happening when it comes to crypto and risk on assets?
Okay. All right. Well, stocks are in a range, right? I mean, it took equities in 87. I mean, there was a wretched double bottom in December. So it was bottom in October, completely frightening retest in December, and then it took a year to get back to the highs. May see the same thing in stocks. 12 months out, the Fed will probably be in full print mode by the time that happens. So, everybody at 109 was talking about 250. And now when Bitcoin's at 74, they're all looking for 68 or whatever. 12 months out, all of crypto is going to be higher, much higher, right? Because it's this simple. It's the future, right? You got nowhere else to bet on technology and the future of money. Bessent, the Treasury Secretary, the spokesman for the administration on the money side, wants a huge proliferation of stablecoins, right? Stablecoin companies like Tether buy treasuries and they issue stablecoins everywhere. He said that we want these things everywhere as a way to keep people interested in the dollar. So if you flood the system with stablecoins and the Fed pushes money into the system to absorb the $9 trillion in debt, you just have this sloshing massive amount of liquidity that'll be there. That's going to push everything. First, it'll push Bitcoin, and then everybody's going to go, wow, look, there's an AI agent doing something in crypto, right? Remember AI agents? Like last year, AI agents will do everything. Now, you mention AI agents and people go, it's Black Monday. Don't talk to me about that. So, AI agents, Bitcoin, stable coins. It's going to happen. Don't throw the upside targets out. Don't.
Bill, thanks so much for joining me this morning.
You're welcome.